What's going on, good people? Welcome back to another episode of the Bison Trading Show, coming at you live from the Bison Trading Lab. Welcome to our live market analysis, where we break down everything in the market and we show you what levels you need to trade from and what's really going on. If you don't know, I'm half of the Bison Trading Show crew. I go by the name of Ty Trades Futures, and of course, I'm here with my guy.
You already know, man, the one and only at I'm the D guy, aka Pro Financial. Man, it's been a long time coming. The team is here. We're live. We active. I hope you guys have your notebooks and your pens ready to take down some levels so we can do it tomorrow and prepare for our Friday live session. So, with that said, man, we just going to just hop right on in.
Right. So, my favorite pairs that I like to go over with you guys, I like to focus on the Dow Jones and the dollar Swiss pair. So, today will be another example of us going over that and talking about what's been going on since the last time we had a chance to check in. So, first thing that pops off at the chart when we look at the Dow Jones, of course, we want to start with top-down analysis, where we analyze what's going on the higher time frame, and then we break it down step by step until we get to eventually the 5-minute chart. So, if we look at the weekly, we can see that the Dow Jones has been in the uptrend, and this has actually been the case since as far back as we want to go. This thing has been going up since the 1800s. It has had its overall dips and corrections and pullbacks here and there, but overall, for the most part, the Dow Jones likes to move to the upside. So we can use that to our advantage when we're trying to figure out what our positions are. So when we see and zoom in to what we're looking at right now in the most recent few weeks, ever since about May, we've been coming out of a consolidation zone and trending to the upside. If you notice, we've had higher lows, and higher lows. So that's a good thing. Whenever we see that on the chart, that means that, yes, we are definitely in an uptrend. So it's looking good on the weekly. We know that we look good from over there from that perspective. So now we break it down to the daily, and let's see what we see right here. All right. So on the daily, we see continuation of what we were talking about earlier. Here are those same higher lows that we were discussing. Notice how every point is higher than the last. That's typical bull market activity. So now that we've been able to identify the market, what we want to do is figure out what are the best points for us to hop into this market where we can get the best potential trade for our account. So in an uptrend, of course, you want to buy at value prices. You don't want to buy when the market is high, which means you look for pullback. In order to find pullback areas, you need to look to the left and find previous levels that used to be resistance in the market. Resistance is basically a point on the chart where prices can't break past. So if we follow the crosshairs and we look at where we're at right now, the resistance level for this particular area had been 35,150 for a long time, for a couple of weeks actually. And then we saw prices break out. They eventually came right back to that level though, right? And guess what happened? They bounced off of that level. They made a higher low and continued to move back to the upside. So those are the types of moves that we like to look for when it comes to the Dow Jones. We look for those pullbacks where prices drop. We wait for the bulls to step back in at key demand levels, and then that's when we look to go long. So in our situation right now, I would say that we've had our pullback. We pulled back to the demand level at 35,000. We had a little false breakout. We had wicks that went down below, but they never closed below those levels. So that tells us that the sellers, they definitely had a little run, but the buyers eventually stepped back in and reclaimed the trend that they already had going. So for us, for me at least, I'm looking for continuation of what we see here. I'm looking for prices to move to the upside and eventually create a new high somewhere towards 35,750 or 36,000 even. So overall, that's my ultimate goal when it comes to the daily. But of course, we like to trade on a swing trading basis, so we don't just want to trade just because of the daily says. Now, when we look at the hourly chart, we can see that the hourly chart, for the most part, supports all of the analysis that we've already had so far. We continue to see higher highs, higher lows, higher highs, and higher lows continuing. So that tells us that the uptrend is very strong. So ultimately, man, for me, I'm looking for that 750 level to get hit. But first, I would just like to see prices come back up to retest market structure at 35,625. So that's the level that I have my eyes on. Eventually, I want to see 750. But right now, I'm looking for that 650 to maybe 625 level to be hit. And if I was to go long, I would potentially try and get in maybe at 342, 350, anywhere within that typical range. So looking for the longs at 350, looking to take it back up to 600, get about 300 points out of that. That's a real good move on the Dow Jones, and that's overall what I'm looking for when it comes to this pair for this moment right now. So that's my analysis for US 30, aka the Dow Jones. Let's pass it over to Darren and let's get his thoughts on what's been going on lately with the Dow Jones.
All right, unhide my moving averages for me. And let's do our top down analysis. And for anyone new to the channel, our top down analysis is pretty much an observation of the market at its highest time frame. And we're just pretty much trying to find its overall direction. You're just pretty much trying to find a trend or a pattern and just kind of follow trend. So, like I said, go to the weekly. I think the weekly, matter of fact, go to the month, all the way to the monthly. We're not going to skip any steps. We're just going to make it kind of quick because we're intraday traders. But for the most part, we're only looking for higher highs, higher lows. Straighten it up. Higher highs, higher lows. Hit that little button at the bottom. A little, yep, and then hide my moving averages. So pretty much we're just looking for the positioning of our moving averages and higher highs and higher lows. Our 20 is above the 50, and we have the higher highs and higher lows, so that lets us know that the bulls are in control or dominating the market. So let's slash down to the weekly. I felt like the weekly is kind of like a crispier picture of the monthly. It's just more zoomed in. You can see higher highs, higher lows, and as you can see, a trend is, the market plays very closely to the 20, and it does tend to bounce off that 20 and, start making its way up, as we did for the two cases that just recently happened. And we even had our most recent case where the red candle hit our 20, and is kind of trying to find what it's going to do. But where we're at right now, we had broken previous higher highs and higher lows, but it kind of looks like we're just kind of moving to the side right now. So let's flash down to the daily. So the 20 is above the 50 in this case too. So it lets us know that the bulls are in control too. So last but not least, it's the daily. The 20 is above the 50. Lets us know that the bulls are all the way in control. So we should be looking for buy positionings at this time right now. So I just feel like being that we've kind of are sitting at areas where the prices were high, I feel like we definitely want to wait for prices to come down a little bit lower to either hit that 20 moving average where it lines up with previous highs, or coming all the way down to that 50, and then we can get that nice bounce up. So let's go down to the 5-minute first to see how high is high and how low is low. And then hide your signals. So it looks in this case that we've come all the way down to some previous highs. So where we are right now, if you kind of follow that line all the way over to the left, it lines up with previous highs. The market has been sitting at for some time. So I think being that it's lined up with those highs right there, and the market looks like it came back. Actually, the market broke down below both the 20 and the 50, and the market is broken below those areas as well. So I feel like right now we're trying to get prices to come down to just a little bit more before we can get the right shoot up. So I feel like right now, where we are right now, I feel like so go all the way to over to those highs over to the left. Yep. Now come down to the next level of highs. So go down to the next level of highs. Well, no, go up a little bit more. There's like a little area in between. Yeah, like right up in there. Yep. So it's actually look like it's coming down to that area right there. So I think actually the area where you were at is actually perfect. So come down again where you were. So yep, right down there, I think could be a nice little demand zone where prices are low enough for buyers to come back in. So I think that 35, 350 area might be ideal. Where is 35, 350? Because we're at 66. Where is 50? 50 is lower. So let's go up. So I think maybe 35, 375. Yes, if we can get prices to try to come back down to that area and stay below that area. And you know me, I like to draw zones. So I feel like where that wick is kind of sticking out. So go to where we are right now. Yep, you see that green wick that's sticking out at the bottom? I feel like if we was to draw like a zone starting from the bottom, where the bottom of the wick is at the bottom of the zone and the top of the zone is at the bottom of the body. So yeah, that's the bottom of the zone. And yep, and that's the top of the zone. I feel like that zone right there. So actually, can you draw a little zone right there? Actually, go to the 15-minute real quick. So yeah, I feel like if can you draw like a little zone for me right there? So I just want to kind of just highlight it just a little bit. Yep. So if the market could come into that zone and stay above that zone, I think that'd be a good positioning for us to begin to head up. But if the market breaks down below that zone, we'll be looking for a retest or another confirmation to bring the market down. So in conclusion, I feel like anywhere in that zone, so let's say 35 380, 35 375, 35 350 are some prime areas where we can get in the market to take it up higher. I feel like we should also, so that'll be our entries, will be that zone. I feel like our take profit should be right where that bottom of the wick is. Make it 15 pips from there. Maybe 15, 20 points or pips from there. That'll be our stop loss. And I feel like I would want to take it back up to structure at 35, 440. Back up to those highs right there. Yep, around those highs right there. I wouldn't want to take it up any higher than that. Like, it's possible, but I think I would want to take it there. And that would actually be my take profit 2. Where the moving averages cross will be my take profit 1. So all in all, I'm looking to bring the market up higher. I'm looking for the market to stay above this purple zone that we have drawn. I'm looking for the market to at least come here for the take profit 1 and up to those highs for take profit 2. And that's pretty much my analysis on the Dow Jones.
Gotcha. All right, so there you go, good people. That right there are 2 viewpoints on the Dow Jones. And as you know, it's one of the pairs that we look at all the time, man. So when we tell these levels to you, take it with a grain of salt or take heed if you would like to. But a lot of the calls that we've made, if you go back and look at our catalog on YouTube, we have more than 30 videos, more than an hour long.
Matter of
Check us out.
fact, not to kind of interrupt you, but right where so you see how we made that high right here? We're on the daily. You see how we made that high at 35,500? Yep. But you notice how the next leg we made a lower high over to the right? Would you consider that a lower high, and would you think that the market could be selling down to set up for a buy?
Potentially, yeah. But I would say until the sellers step back in and push prices below the wick for this last daily candle, I would say we still in that uptrend.
Okay.
But it could come back to the 20. Test it and sell up. Oh, man. That's one problem. Oh, nah, he on mute. Oh, okay.
What'd you say?
Oh, I thought my Wi-Fi had went out. He was on mute.
No, because I was like, I had put it on me because I had grabbed some, but did you say something to me? Because I was like, I felt like that could have been a lower high. What'd you say?
I thought the connection had went out. But yeah, I was saying, I don't think this could be a potential lower high if this daily candle right here gets broken through and we can close below. We could come all the way back to 20, bounce off of that, and then move higher. But the way the Dow Jones has been moving the past couple of weeks, it's just been a relentless uptrend. After all of this little sell-off, after all of that happened, it's just been up every day since then.
Right.
Most of the time, we get the pullback once we make a new all-time high. Like the same way we made an all-time high right here, we pull
Mm-hmm.
back, we can look back on the chart. If we see that multiple times, every time we made a previous high back in the past, we had a sell-off. So I feel like we made a high a couple of weeks back. We had a sell-off back to the 50 moving average, and now we're on our way back up to make a new high. And then once we do that, we're gonna sell off again. That's been the pattern lately.
Okay. I see what you're saying too. Like when it does make its move down, it definitely finds some exhaustion to make its way back up again. And if I feel like being that it just hit the blue moving average too, that it came all the way down, hit the blue moving average, and ever since then we've been making highs. I think that would definitely be valid. That this could be that exhaustion up again.
One thing about the Dow Jones, it loves to go up. And all else fails, and it looks like it's just about to make lower lows and lower highs. That's when all the buyers step in. So all my
So
sellers out there, you got
so
to be
so
cautious
what
about
would- what would
this.
make you go short?
Mm. I would have to wait for the hourly chart to turn around. Once you start seeing lower lows and lower highs on the hourly chart, it's okay to take a little quick short trade. But
Right.
until that happens, we gotta stick. I gotta stick on the long side because this down move on the chart. Like we go back to this move right here from August 16th. We went from 35,600 all the way back down to 34,600. So
Right.
within a matter of 3 days, 1,000 point move. So
That joint
the down
fell to
moves
the
on the Dow
floor.
Jones, they there if you want.
And I think I was kind of telling the people that too while you were away. I was telling the people like just because we're going up does not absolutely mean that the opposite way is out of the question. I told them that it's all definitely based on timing and positioning. Like for every like I really been in pushing that phrase that for every good down move you need an up move, and for every up move you need a great down move. And I feel like we definitely prove that every day.
Back.
So yeah, I think that's our wrap up for the Dow Jones. Well, that's my analysis for the Dow Jones.
Uh, so let's go ahead. Let's move on into our next pair. You guys know if you watch the show constantly, you know what I had
You should
coming up.
know, man. Them people should know your joint. Actually, that should be a new
Yo,
name: Dow Jones Dollar Swiss.
DJDS, huh? So I have a pretty interesting case that I want to make with Dollar Swiss because I see a lot of things going on right now. And it's two different stories when I look at it from the long term and the short term. So I want to break that down for you guys tonight. So I want to start this off by saying let's actually go to the monthly chart and see the long term picture when it comes to Dollar Swiss. Now, Dollar Swiss historically has been in a range since 2012. Now, since this time period, we can see that prices have pretty much, for the most part, been stuck between 90 cents at the bottom and $1 at the top. That's been the range, 90 cents between a dollar. Now, at the bottom of the range, we break out a little bit. We might push into the 89s, the 88s, but we always snap back. Same thing at the top of the range. We might push into the 101s and the 102s, but we always snap back into that range. So
Right.
if you're playing this long term, that's something that you definitely want to keep your eyes on. And that's important because we're actually trading near the bottom of the range right now today. We're trading at 91. So if you're a long-term trader and you're looking for something to invest in, this potentially could be something that you look forward to because historically buyers have just found this level to be attractive for whatever reason. And whenever it gets down here, they scoop it up and it goes up. Not immediately, but it takes time. Remember, this is a monthly chart. It takes time, but eventually that move does happen. Now, here's the thing that really concerns me. We see that prices are back down at the bottom of this zone, but we also have to respect how prices got here. We've been in a downtrend since 2019, right? And we've had continuation of that downtrend all the way up until this point at the beginning of the year. So I want to break it down to the weekly chart so we can actually see what happened and we can compare both sides because the Bulls and the Bears have a case. So we want to see who has more evidence on the table, and that's the side that we'll pick. So if we can look at the weekly chart from the beginning of the year, since that time period, the downtrend has kind of paused a little bit. It found support down here at 88 and a half. Boom, had a huge this should be 600 something pips almost, 600 something pips all the way back up to the top, right? But the sellers came back in and said, hey, it's still a downtrend, and they pushed prices all the way back down. But look at what we have right here. If we look at this price right here and compare it to where we came from, it's a higher low. We know what that means when it comes to bull market. Every downtrend comes to an end eventually. Higher lows and higher highs are something that we look for to indicate that. So the fact that we have a higher low right here on a weekly chart is very, very impressive. And if we look at where this higher low resides, look over to the left, lines up with what used to be previously support over here on the left side back in 2020. So this support level has been holding up for at least a year and a half. So we came back to that level, bounced off of it, strong reaction to the upside. Now look at this. We pulled back, right? What did we make again? Another higher low. So we have a string of 1, 2, 3 consecutive higher lows coming off of a major, major demand zone on the long term monthly chart. So that's something that we want to take into consideration also. But thing is, the thing that gives me a little bit of pause when it comes to this move and makes me a little bit patient and makes me want to wait for my long trade to actually set up completely is what I'm seeing on the daily. On the daily, this, in my opinion, is a classic selling pattern where you have an initial down move, right? We had that happen from April this year all the way down to June this year. So probably about 2.5 months. But then look at this vicious retracement back up to the upside. It came back, retested what used to be a previous low, found a rejection at that resistance level, and ever since that point, it's turned around. We haven't been able to get past that point. And if we look at where we are, even with all the bullish moves that we've had, we still haven't gotten past that 92.50. Every time we get up there, we get rejected. So that's the only thing that I'm looking at that makes me kind of say, man, I don't want to just fall in love with the long trade so far, but I know from a historical perspective that this is the trade, or I hope that this is the trade, the long trade that's coming up. But it's just a matter of patience and me waiting for the setup to happen. I've been watching this since the beginning of the year, waiting for this exact move. It's been 8 months, going on 9 months. It's a patience thing. When you want to swing trade like that, you want to catch 1,000 pips, you gotta wait for your entry. So, um, if I'm gonna be honest, I really like the setup right now because long term, here's another gem that I want to share with you guys. If you're building a position for the long term, your entries don't matter too much as they would when you're on a day trade or a swing trade because you got to be on point, on target, and correct about your direction when you have a smaller time frame. But long term, if you know it's going to $1, if you can pick some up at 91, who cares what the chart looks like? That's a value price. Pick some up. Don't put your whole position size behind it, but maybe put like 10%, 15%. So you can start accumulating your position at lower prices. Because if you look back at it in a year and it's at 98 cents, you're going to say, dang, I could have bought it at 91, but I bought it at 93. So that's how I like to do it when I play these long-term moves. So I want you guys to use that strategy for your long-term trade, not necessarily for the short term, but definitely for the long term. Add that one to your memory bank. So for me, I'm just waiting for that long trade to set up. For all my long-term traders, this is definitely something that you should keep your eyes on. It's not ready quite yet, but it's in the oven. It's baking, it's marinating, and it's set to come out very soon. So with that being said, I'm gonna go ahead and pass it to D, and let's get his thoughts on it.
That was definitely a great analysis, and I would definitely totally agree with
Make
you.
sure he's not muted. He's still muted.
So I was saying that was such a great analysis, and I was saying that I do agree with you. And being that I know that you're an expert at this particular pair because you've been watching it for so long, and I've been a witness of you watching it for so long, that anything you speak of on this particular pair, I'm all in. So with you saying that first, I do agree with you on the long, but obviously I do want to look at it myself, and I never want to just go off of somebody else's. You always want to double check your entry. Like, don't ever go off of someone's idea and just say, oh, they said it's going to go long, so let's just buy. Like, no. And sometimes when someone tells you to buy, you probably miss that particular area. It's a particular area you have to want to get into before you decide to go up. So with that said, I do agree with you going up, but let's do our top-down analysis. Unhide my moving averages and go to my monthly. We're intraday traders. We want our money now. We don't want to really wait till the next day to get our money. So we're really looking for the positioning of moving averages and higher highs and higher lows. In this case, we have lower lows below the 60. I keep saying 65. The 20 is below the 50. So let's flash down to the weekly, which is going to be a crispier picture of the monthly. So in this case, we see like the weekly like this kind of going against the monthly, that we would have to agree that the market is either doing some type of pullback, retracement, some type of stall, some type of something before it sets up to go in its original direction. So if we are saying that the market is going to go up, and it's kind of, this one is saying that the 20 is above the 50, that we would have to expect the market is definitely going to try to pull down some and appease us buyers to want to hop in, because we want to buy low, sell high. So the weekly, the 20 is above the 50, but we still have the lower lows and the lower highs in this case scenario. Go down to the daily, and the daily would pretty much be the deciding factor on which one we're going to kind of decision we're going to stay on. So as I pretty much thought, the daily is definitely going to line up with our monthly. And like I said, our monthly is our biggest time frame, so we're gonna we have to kind of stay on the side of the biggest trend. So we're gonna stay up, but being that we can't ignore the weekly telling us that it's pulling back. So I think in this case, since we have the lower low and lower high, I think we definitely want to see the market break above that 50 moving average. That's definitely going to be key. And notice how that's 50 moving average, it aligns up with some higher prices over to the left of it. That's 65. If you kind of flash it over, it does hit some high areas that are important. So I think since we are exactly on the 20 moving average, and we are coming out of prices that I did want to particularly highlight. And what I really want to highlight that sticks out to me, you see that wick right there in the middle that's sticking down at the bottom? Nope, go to over one more to the left, right there. Yep, that wick from the top of it down to that one. But that one you showed first over here all the way to the right. Nope, over here. Yep, that one to me is a little bit more appeasing. So I would definitely have a little zone. Hide your moving averages.
They have
not moving averages, signals. So I think I would definitely want to have some type of zone from that green wick just up to the bottom of the body. And being that it looks like it's coming out of that particular area, I either want to see it come back down to retouch the top of the green box, or I want to try to use the 65 as an entry, but I would need it to break all the way above it first and to retest it back down again. But this one's I'm not going to say a little bit tricky. I just feel like it's still moving down to set up for the short. So I'm a agree that I would put a zone right where that wick is. Just put a little zone, yep, where that wick is. and I would want to see it come back down into that purple box, either come back in the middle, come back to the top, and then go back up. And I feel like my first take profit would be the 65 moving average first, and then the purple zone would be my TP2. But I always take profit majority at TP1, just because a lot of the times it goes all the way back down to retest the entry before it actually goes to my way. So I want to take out what I can before it goes the other way. So the areas I would definitely want to do is from the bottom of that purple box on up. And what's kind of tricky about it is because the market is sitting exactly on the 20 moving average, and I wanted to kind of use that as a tool. But we can still use it as a tool, but it's kind of like a right now situation, and I want something that's kind of like build up and go. So like I said, from 91 200 up to 91 200, and I would use every quarter level up and back down would be. So I like to do 3 entries, but I would definitely use that 91 200 as a key area and stay with the quarter levels. And like I said, my TP1 is going to be to the 65 moving average first, and then I would take it to TP2 all the way back up to the purple box. So that's pretty much my analysis on that one.
Alright, so that right there is US 30 and dollar Swiss. So those are the 2 pairs I wanted to bring to you tonight. I have a little bit more knowledge to drop when it comes to traders talk. But right now, I'm gonna pass it over to my boy Dan. He has some pairs he wants to break down too. So let's go ahead and get into it.
So you already know, guys, we like to do my favorite AU and gold. But let me definitely grab my notebook, because like I said, I like to do with my traders, I like to go over the previous levels we did last week so we can kind of see where we are. So let me grab my notebook real quick. Alright, so let me pull this up. Share my screen. Sorry guys, my stupid mouse. There we go. Alright. Let's get this thing going. Let's do a full screen. Alright, so the first one we're going to pop this off with is AU. Where's my AU at? Alright, so let's go into my notebook. I think we were kind of... Yep, I can see right now. I think we didn't get that trade, guys. Let's make this smaller. My mouse is acting stupid. Alright. So we have... So for AU, we had 73,775. Where in the world is that? Why is my mouse thing not working? I just bought this mouse. I'll have to return this junk. So 7, 3. Let's go up here. So this was our NCO. I think we did end up getting our areas hit in that area. So 73775. So that's this blue line. and then the 73 750. And pretty much the idea where we were, which day was that we were on the 10th. What's today's day? Hold up. Today is the 25th. It hasn't been that long, has it? No, the last time we were on the 19th, but I definitely thought we did a stream. We didn't do a stream on. It's been that long. All right. So I guess let me see. That's all the way over here.
Thought it was one last one.
That's what I said. That's what I'm saying. The 10th? When was the 10th? The 10th was Tuesday. I know I did a stream on Thursday, which was the 12th. Yeah, I did a stream on the 12th. But what about the 17th and the 19th? That's what I'm saying. I don't know, but I know I didn't cancel. But that's not a conversation we need to have right now. So let's just say last class was the 12th. That's crazy. So we were over here. So pretty much the idea we wanted was we wanted to go down. We wanted to go short. Just because the market has been shortened for a very long time. I'm mad my mouse is not really working out like that. Oh, I can't even zoom in. Hold on, let me switch over to my other mouse real quick. I can't even. My fault, you guys. I need just for me to explain. I need to get into the depth of it, so I can't get into the depth of it when I can't move my charts right. All right. All right, my fault, you guys. Hold on. Is it working now? Here, yeah, it is working. This is the part right here. I couldn't do this open and close thing, so I couldn't do that part. So that was annoying. All right, so just say we did have to come. We was the 12th. We was expecting the market to come up, hit this particular area because we were looking over to these high areas over to the left. And what we were saying was like either the market was going to have enough momentum to come all the way to the purple line. I mean, I'm sorry, not the purple line, the blue zone. Or it was going to try to play a key role off of this little high area here. In fact, it didn't have enough momentum to do neither one. It came down to the bottom of the area. So that's a key note. Either aim for the top of that candle. So if you're looking for the market to go up, find an area. And like I said, I usually like to find a candle. And I think this was the candle we were kind of highlighting. Either go all the way into the top of the candle or aim for the bottom of the candle. So in this case, it hit that bottom of the candle. We went for 73 775 and 73 750. We got that low all the way down. I think we went for that 1 to 4. We couldn't get it perfectly, but we definitely smashed our take profit. So I think that we were definitely on the right track with that one. So I can't believe it was that long. Alright, so now we're going to kind of try to find out what the market is doing now. So let's do our top-down analysis. And let's make sure we write our notes, date it properly. You know, maybe it was my fault, but today is definitely... Hold up, let me plug my computer back in. Alright, so let's kind of hide this right here. Today's date is the 25th, August 25th. Alright, so we pretty much came down to an area we definitely been talking about, and we were highlighting these lows over here where it lines up with these highs was a strong duality level. So that was the area the market was looking to come down to. It looks like it came down to that area, not exactly to the T. It went a little past that area, but it looks like it's now retracing back up. So I think this is finally the area where it can begin to start heading up now. I feel like if this area does get broken, we can definitely see prices come all the way back down there. But for right now, The market is retracing, so I feel like this is going to be a strong demand zone where buyers want to get back in. But we can't ignore that the 7 is below the 65 on this one, and this has been making lower lows and lower highs. So let's just take that into consideration. Let's flash down to the weekly. The weekly, like I like I said, since these two double tops over here to the left is not broken, we really can't say the market is trying to head to higher highs and higher lows. We would just really have to follow what we see, which is lower lows and lower highs. Since it came down to that nice strong duality level, I think we need to be patient, and either only anticipate the market to continue to do what it's been doing. Don't really try to play off of, oh, the market could flip back around. Only follow what the market has been doing until you see signals where, higher highs, where these areas get broken to go for the long. So for right now, I think it is setting up for prices to continue down lower. So on the monthly, the 7 is below the 65. The weekly, the 20 is above the 65. So I think this is going to be that retracement phase we need to bring prices back up to that 7 moving average. And this could be that key area where we can try to bring prices back down lower, either to retest the bottom of structure, or we can try to take it back down to its next duality level, which I don't really think it probably do, but I'm not going to trade what I think. I'm only going to trade what I see. So let's flash down to the daily. So the daily, it really kind of shows that we did get down to lower prices, possibly where the market has been trying to get to for some time. And it finally got to it, and it's either trying to make a decision to either go back to higher prices, or it's trying to just reunite with that 65 moving average and then to continue back down to lower prices. So I think for right now, we need to kind of just be patient on this one. Kind of just make sure you have your signals in. Kind of just don't fight the trend. Understand this is going down. So I think with the monthly 7 below the 65, the daily the 7 below the 65, and the weekly the 7 is above the 65, I think that's telling us we may need 1 or 2 more confirmations. But I think overall the market is still shorting, trying to go down to lower prices. So let's flash down to lower prices, lower time frame to see some entries. So we're gonna stay. So I'm gonna give my ideas for both sides, buying and selling. But like I said, I need all of my higher time frames to align before I hop into a trade. So let's just say we're gonna go for the short. That's our first idea we would want to kind of stay on, because that's what it's kind of been doing. We don't want to fight the trend. So I think since we're shorting, we definitely want to stay with the logic of buy low, sell high. We are at a higher prices where the market has been shorted before, but if you kind of really look at it, it broke this structure here, and it looks like it came back down to possibly retest to either continue back up, to continue back up a little higher before it continues to go back down. So I think for the short, we would definitely want to be a little bit more on the conservative side, and I think we should definitely be patient enough and wait for the prices to come down to break this structure first. If this structure down here can be broken with a retest, I would be all in for the short. I just feel like where it's at right now, it has possibilities to head up a little bit more, just because this structure was broken and we got the retest coming back all the way down, and it didn't break all the way below it just yet. It's pushing past it, but there's no complete candles that is below this area. So until the next candle forms completely below this high, I would still say this is a retest and that we should be seeing prices head up a little bit more. So let's flash down to the 30-minute. So for the short, let's really highlight this area where this high over here lines up with these lows. Not this high and low, but this high and these lows, I meant to say. They're kind of the same thing, but I kind of wanted just to be clear and just to draw a box to be certain. I want the top of the box to be, and I think this candle right here is kind of like really sticking out to me, and obviously coming back down to the bottom of it. So I think if we can get the break of this particular zone, I think I would be all in for the short, and I would only take it back up to the top of structure. And let's see how many pips that is. It's about about 37, so you can get a good 25, 30 out of that. Um, let's go for, if we were to go long, so actually let's write that area down. So let's write these prices down. So 7 to, let me see, 70 to 475. 7 to, so as high as 42 475 and as low as 42 375. Am I saying 42? I meant 72. 72 375. And I'm only saying as high and as low. I'm only saying as high as and as low as, so you can be, the person who controls the actual entry. So this will be pretty much my entry. I want to do probably like a 2 to 1. Let me see what it looks like. Let's go. I want like 10 or 15 pips from here. So behind this 65 moving average. So let's just say to the red line. And this is a 1 to 7. We're not going to go all the way up to 1 to 7. Let's do a 1 to... No, we're not going to be greedy like that. We'll just do a 1 to 2. We'll go for the 1 for the 2. For looking for it to come down and hit this for our take profit. So that'll be our buy. I'm sorry, that'll be our short. We're looking for it to come down, hit this area, find resistance to go up. To go short, I feel like where we are right now, I think with this area broken over to the left, this high area, if this high area, let's actually highlight that. I think that's pretty much right. Yeah, so pretty much for the buy, I'm looking for it to find resistance here, and then begin to go up. So this high over here is pretty much what I'm going off of. Once it gets that break up above it, I'm looking for that retest. Hopefully come all the way back down to that yellow zone to go up. So just to give a little draw figure for our go, because that's what I like to do before I pass it over to Tiberius. So for our short play, and we're actually going to write the levels out. So for the short play, we're looking for this to happen, and this to happen, and that's for our short. And for our long, we're just looking for the rejection right here, and we're just pretty much looking for it to go up. And I think so yeah, so pretty much our stop is going to be 72250, and take profit is going to be 72680. All right, TP. All right, that's pretty much my analysis. So that's my buy and that's my long. So that's pretty much my analysis. I'm passing over to Tiberius. My fault.
Right. So when it comes to AU, let's go back up to the daily chart
To the
and
daily.
let's take it from there.
You want to hide everything?
Yeah. So on the daily chart, what I'm seeing is a classic move that's typical in a downtrend. When when we see a strong downtrend in market, usually when the sellers are strong, the pullbacks will be just as vicious as the down moves were, and they will be very significant. And that's a good thing for us as traders because just like we were talking about with the Dow Jones earlier, where we said even though the trend is up, you can still catch a short. Well, with AU, even though the trend is down, you can still catch a long. Because let's move back down to that. Well, actually, while we're here, I just want to highlight market structure. We have lower lows and lower highs. We know that in a downtrend, prices like to pull back up to what used to be the previous low, retest it, and bounce off of it. So for us, that level would be about 73 even, 73.50, somewhere between those levels. We look at that on the chart, it lines up to where we are right now. So we're running into that. Well, we're not there quite yet, but we have about 50 points, 50 pips to go until we hit that level. So we're coming into that last low. So maybe later on this week, that'll be a pivotal level that we look back on. So let's drop down to the hourly and just look at how strong this retracement has been to the upside. So as we can see, all of the moving averages have been broken back through when it comes to the hourly chart. And I think depending on what type of time frame you're looking to trade the market on, this chart right here, the hourly, would tell you more as a trader than the daily chart would, just because of what we're trying to do. We're trying to make money here right now based on what we see. So even though we know the overall trend is down, because we've been making higher highs and higher lows, we reclaim both moving averages. Like Darren was saying earlier, we need to look towards a long trade. It's not like we're holding it for 100 pips. We're looking to take it from the bottom of structure back up to the top. So I agree with Darren 100%. I think the retracement still has room to go. We saw on the daily chart that we're still 50 to 60 pips away from what should be maybe a major supply level. So, like Darren always says, in order for the short to continue and the setup to be very nice, we need a good long trade to happen before the shorts step back in. So I think if we play it the right way, we could definitely capitalize off of this uptrend that we see right now because the higher highs and higher lows that I'm seeing are very strong. We just need to make sure that when we do go long, we don't go long at any major levels of resistance because the overall trend is still down. We want to set ourselves up for success.
All right. All right. Let me see. Is there anything else though I need to say? Yeah. So I don't really see any other. Oh, you was done, right? I didn't want to make sure I cut you off.
Yep, I'm done.
Yeah. So I really don't want to give any guidance that I wouldn't really much take. I wouldn't take. And like I said, since the overall trend has been down, I would kind of stay more on that side. But like Tiberi said, me and him saying you can definitely make money on both sides. It's definitely just about, being patient, having those confirmations. So let's go over our last pair of the night, which is gold. And gold, let's kind of look at our last prices, what we were doing before, the 12th. So I think we were looking to go, short. And I think it went against us, possibly. So 1751, yeah, it definitely went against us. So 1751. What's that? 1751 over down here? No. 1751.50. You had been over here. We have it over here. The 12. Jeez, let me go over to a higher time frame. So the 12th. I think that's the only one that I have. Alright, so 1751. Where is 1751 at? Okay, so 1751 is somewhere around here, this area. 1750 and 1748. So it probably had to be somewhere around this particular area, and I think we were trying to go long, but I don't think I would say long after seeing this big old drop. I think we were kind of looking to go short, and I think it just kind of went against us. Our take profit was 1753. Yeah, so if we were looking to go 1753, but that's only like from 1751. Yeah, that's looking for a buy. I just don't see how I said for a buy. Maybe I kind of noticed that this big wick, that's probably what it was. I seen this big wick and I was like, anything that the market was like, no way, we wanted no parts of down here. So we were probably definitely looking to go buy. So I think that's it. That's exactly what it was. The market was in such a down movement, and I think this was Tiberius specialty, kind of like that V pattern reversal. And being that we had this big old wick over to the left, I think this was like the key indicator to let me know, like, I think the market is just at least going to buy for a temporary time period just to get over this big old buy where it did right here, and it pushed all the way down. So I feel like I kind of looked to go from probably at the bottom of the green box to the top of this red box up here. I was probably really looking for it to go short, but I was just like, since this red wick was the push up was so big, I felt like the retracement was definitely going to be very, very big, which it was. So I think it definitely came back up to areas that was very familiar. It came back all the way up to a previous lower level. It broke up above that area and it came back down below it. It broke down below the 7 moving average in this little blue zone, which lined up with this high. So I think for sure we're probably looking to see prices to go back down a little bit lower now, just because it finally got its breath back from this big push back up, lined up with previous lows over to the left, and then from here it's been making lower lows and lower highs. So I think for sure we can probably be seeing prices head down short. And another thing, I know I told you guys, if you were very unsure if what was gold doing, what was the one pair you can kind of look at, I'm gonna give you guys like 2 seconds to answer. All right, so you got it right. The dollar index. The dollar index is the number one indicator to let you know if you don't know which way gold is going. You can kind of just briefly look at the dollar, and those were like, I think, negative correlations, meaning when gold is down, dollar is up. When the dollar is up, gold is down. So I think for the most part, since we found this high up here, we look like we're in a very strong supply area. I think that the dollar could be heading down lower. So if the dollar is going lower, I think we can definitely kind of safe to say that gold is going up. So it's only one way to kind of test that, or to see if that's correct. Let's do our top-down analysis. So let's go back to the dollar index real quick. I just forgot that fast. So if the dollar index is supposed in a strong supply area and should be looking to go down, but it's been making higher highs and higher lows. So, but I'm kind of banking on this going down. So if this is going down, gold should be going up. So let's go and look at gold. So we're saying gold is going up. So let's look at our top-down analysis. So let's go to it, looking at it naked. So the only thing we're kind of looking at is pretty much seeing the positioning of our moving averages, which is that 7 is above the 65. It broke previous highs. But I think what I really told you guys to really kind of take notice of this lower low and lower high that's been going on. and that until we can get prices to kind of break past up these highs again is when we can kind of look for gold to go up. Until then, we would have to consider it to stay what it's been doing, and that's going down. But I think with this nice little pullback up right here, how strong this almost looks similar to a hammer formation, which is a number one key reversal candle. I think that we can definitely be expecting prices to start heading back up again. So let's flash down to the weekly. So the weekly, the market has definitely bounced out this wick right here is definitely really getting stronger and stronger. But overall, the 7 is above the 65. Still lower lows, lower highs. And let's flash down to the daily. I think the daily right now, I feel like, the 7 is below the 65. We haven't, like I said, this wick is very strong right here. So I feel like until we can get a break of these highs over here is when we can think about going long. Until then, right now, I think we need to be patient on this one. So let's drop down to a lower time frame. So I think for me, I would stay to the side on this one until I get a little bit more confirmation. And the confirmation, so the confirmation for me would be I want to see prices go back up, and I want to see some at least either this high over to the very left. I don't know if you guys can see it. Let me delete this. So see this high area over here. If we can get the break back over this high and over this high, I will begin to look for buys. But if it stays below this high level over here or this blue box, I don't know if you can see it. It's probably okay right here. This little blue box right here, which kind of looks like a head and shoulders. If it comes up into this blue box here, I'm looking for prices to pretty much come back down again. Yeah, so I think let's drop down. So for me, I'm going to stay to the side on this one, but I just kind of feel that the short is still going into play. I feel like for the short, I want to see it kind of come back up into that blue box or the 65 that 7 moving average, and then move it back down again. That's for the short. If I wanted to buy it, I would need it to come back all the way over to this higher level to the left. Once it breaks up above it, come back down for the retest, and then that will be my entry. So I think up here would be more my entry if I was to buy. For sell, I'm looking forward to kind of stay below this 7 moving average and push back down again. I know I said a mouthful, but Ty, tell me what you're thinking, man.
Alright, so let's pull it back out to the daily chart. I want to talk about this bear flag that I'm seeing pop up on the chart, what it means for me.
Well, let me delete this blue line. Anything else you want to take? Want me to hide the signals or?
Yeah. Alright, so when we look at this move that happened on gold, let's put our eyes on the most recent down move that we see back from August 8th and the 9th. So if we look at where this move originates from, it originates right there from the moving average. That's where the selling initially started from. They were playing around at the 65, where the 7 and the 65 come together. They were playing around for a few days, 1, 2, 3, about 4 days, and then finally prices broke to the downside. They shot straight past the momentum, well, the demand zone that we see at 1770, and they made a crazy low with that wick that we see right there. That right there represents an extreme panic selling movement in the market. And if we look to the left, we can see another panic selling move from before, way back in around mid-June. And we see what happened over there. After the selling subsided, the buyers stepped back in and they pushed prices higher, but only to a certain extent. And I believe that we're seeing the same thing set up right now where we have a bear flag. One thing that I've seen about bear flags is that if the drop is big enough, buyers will run prices all the way back up to where the initial downtrend started from. So we could come all the way back up to that 1800, 1820 level where we initially started to sell off from. As you guys can see, we've already come back up to the moving average. So technically, we hit that supply level already. And look at the candles that we got. Oh, thirsty. And look at the candles that we got when we pushed off of that moving average and we got rejected. We had not a perfect bearish engulfing, but close enough where we ran all the way back down to the lows of the candles that we made before. So whenever you see a move like that coming off of an important level of resistance, that indicates to you that the sellers are trying to take over. And you add that to the context of the market that we've already established, and it gives you a very good potential for a nice short trade. So now that we can identify that, all we have to do is find the best entry to potentially hop in. Now, the thing with gold that really makes me kind of nervous is the fact that for some reason is I'm not gonna say it's just like the Dow where all it does is go up, but over time gold does like to move to the upside. So I don't want to, hop in the way of buyers because they might be looking at this like, oh, prices are low, let me buy some gold. But if I was to just base this on the chart, I would say right now today I'm leaning towards the short side when it comes to gold. And until prices break above 1800, that's when I would consider taking a long. But until then, I gotta stick to the short side.
All right, there you have it. So just how I said, I think right as long as the market stays below this blue zone right here, I think we can definitely be on board for the short. But until it really breaks this level or this high up here, or a break above that 65 moving average, is really when we can even consider, even think about to start thinking for the buy. So I think since we're not near that level right now, I think it's kind of safe to say, that the sell is more of the better trade to take in this case scenario. So I think that's my analysis on this one. I think really quickly, let's kind of go through. I just want to just talk about one little thing for our exploration. Oh, before you have anything else to say before we move into our exploration section?
No, I'm good.
All right, I think one of my friends kind of told me about AMC that's really been going crazy lately. I haven't really been watching it, and I guess AMC is a movie theater. They do, you go to the movies. I think they even do 3D movies. But I think they said, prices have been kind of shooting up for the most part. And I know that there was a big craze with AMC back in 2020. Was it 2020? This one was definitely, it wasn't open before 2020? Wow. I guess it was, right? It probably didn't go public.
No, that was public. What period?
Oh wait, no, this is not AMC.
It's say
This is not AMC. Is this, wait, is it, wait, stop. Yeah, we're talking about stock here, guys. I didn't mean to flash over so quickly, but yeah. For our exploration section, we're gonna kind of go over AMC because, like I said, some talk been going on. So let's kind of look at it on a monthly. So I think, like you guys, like before I previously said, it's an entertainment company. They do movies, but for some reason lately, they've been shooting up, doing really big up moves. Now, like I said, I think it started before. It started in 2021, I think, December 20. Ever since then, ever since the beginning of, I think, this year, it's really just been shooting up. But what was all the craze they was talking about back in 2020? They was like, oh no, it was falling. The price was going down. I think that's what it was doing. Price was going down. I don't know, but anyway, I think I wanted to kind of look at AMC because I think AMC, my friend said, AMC has really been trying to revamp their company, trying to do things to bring things back. Again, I haven't seen this news or anything. It's only going off of he say, she say. But I think they were saying that you can definitely expect to see AMC price, begin to shoot up, and we can kind of see prices that it's kind of never really hit before. So let's kind of quickly kind of go over it really quickly, and I'll pass it over to Ty and kind of gets his thoughts of AMC. So pretty much, I just feel like it's been public. So I think it's AMC is one of them things where it's like a movie theater, and I don't know when the last time I really went to the movies, honestly. And I thought it was going to be one of those things where movie theaters kind of go out of style or be xed out due to DVDs and take home movies that not too many people still go to the movies. So I don't know. I guess they're doing things to kind of change that. But to me, just looking at this chart, it looks like it had its little run back in 2015, 2016. I'm pretty sure there was something that came out that kind of really made these things prices shoot up. But I think for the most part, once we got that retest at the top in 2016, it just really just fell to the floor. And it actually went all the way down to prices that were never even traded before. It came all the way down to $2. So I feel like down here was definitely a good area to hop in for AMC. I wish I would have hopped in down here at $2, but now it's definitely up to $43. So I think that would definitely been a good little move on AMC. I think since we got higher prices up here, I think we can definitely try to see prices come back down and retest some lower levels, being that this could either be the first leg of a higher high, higher low situation, or it looks like it's going to either come down to either retest this area, re-break it, and come all the way down to lower areas. Who knows? But the 7 is above the 65. Let's flash down to the weekly. 7 above the 65 too. And I think that, we're going to definitely can expect to see prices begin to go up. Let's flash down to the daily. The 7 is above the 65. So I think for this one, it's not really a buy and hold type of situation. I think this is really more like a buy, kind of set your goal where you want it to kind of go. Because I think at least for me, I want to be more of like a conservative. So if it's down here at like, let's just say 40, I want to try to at least get 80. And that's actually in areas that's never really been traded. So I think you definitely want to find a gold, and I think you want to try to only go back up to structure or just a little bit lower, because there's times where these wicks to me don't really, I hate those wicks, because when you go to the line chart, these are kind of really where the areas where as high as it's gotten to. So if I was to put it, let's just say here, when we go back to the candle, it's like there's areas up here that it could possibly hit. So I think we can definitely see. I don't know how to even how to translate this, but I'm gonna just say 40%. I don't think I would be that greedy, but I would definitely try to look for some type of reasonable area within 40%. But I would really bank on the short. And I'm going to tell you why. I just feel like there's more out of the short. You can get more out of the short than you can with the buy. You can get up to 80%. Let's just say if we did catch it at the very top up here, going all the way back down would be 84%. Whereas if we were to go for the buy, it would only be, like I said, like not even 40. It would be like 30 something percent. So that's just me, in my opinion. I just think for this one, I would kind of aim more towards the waiting for it to get to higher prices and bank on the short than to kind of really play on the buy. I mean, like I said, you can definitely make money on the buy, but I think it's really limited, capped at under 40%. So, Ty, tell me what you're thinking on this.
So with AMC, I see that they've been making some decent moves since the beginning of the year, like you said. So that's a good thing. That's what I like to see. I like that type of price action. But then I start having questions as to like what's going on beforehand, because we had a crazy sell off before this uptrend started. Um, Software update.
You sharing your screen?
I'm on
Oh,
yours.
okay. I didn't know if you was. All right, go ahead.
So what concerns me and makes me think is like before 2020 hit, what was causing the stock to go down since 2016? And as Darren was pointing out, like of course, you know, things are switching. The times are changing. People aren't going to movies. We have streaming services, DVDs, all types of Netflix, different ways to watch movies where you don't have to go to the theater. Most people's home TV is better than the movie theater. because it's comfortable, private bathrooms, all of that. So my real question would be, like Darren said, his friend is saying that AMC is kind of changing around the company. So my questions would be, what are they doing to change it? And are those changes sustainable? Because when it comes to stock, the reason for the prices moving are the fundamentals behind the company. So I'm saying, will a movie theater company be able to still be relevant during the 2020 decade? In terms of streaming services, I would say the way it's looking, maybe not. But if AMC can get into streaming and maybe find a way to work their way into that sector and actually gain some real ground in there, they could make a big comeback. Based on the price action, the chart says that the market believes that AMC will do that because this is a classic cup and handle formation. We already saw what the buyers wanted to do at the beginning of the year when we had that huge run up. We pulled back a little bit, but now we're right back and the buyers are stepping up again. So they already showed their muscle and showed you what they wanted to do. We know that the company is trying to make moves to turn around. So if we can see the price action that supports the company being successful at what they do, I think that price is to go higher. But I just think we need both the technicals and the fundamentals to line up. And once that happens, I would say it's a go for AMC. But just be cautious because we see on the chart how much it can drop by. It dropped by almost 50%. It went from 61 back down to 30 in less than a year. So imagine if you bought at 60, you would still be hurting right now, even though the stock is in the uptrend. So we got to be smart with how we want to enter this trade because, like Darren said, it's not something we're trying to do long term. We're in it to make some money, get out, and then look for the next move. So we got to be smart on our direction, on our timing, on our entry. And with that being said, I think we could do very well with AMC as long as we're patient.
All right, guys, there you have it. So you have two analyses on how two professionals will handle AMC. So it's up to you to handle that information as you will. So that's pretty much our exploration section for the night. So we're gonna move into the last section of the night, which is my favorite section of the night, which is traders talk. So we know we added this section to the show because we wanted to be blunt on what this trading journey experience is all about. I know everyone gets a bad taste in their mouth when they hear about forex or trading, but we wanted to be here to show you that trading and forex is real. Unfortunately, some people didn't get taught the right way the first time, and it was all about something that that it wasn't about. And I'm sorry, but when you actually learn how this goes, it's all about setting goals and hitting it, hitting areas, hitting levels, looking at patterns and trends. So with that said, I think what I really want to kind of zone in on tonight is just really not fighting the trend. I think for me there was a couple of trades I had earlier, I think last week. I'm not sure. I think I'm trying to think of the pair, but I don't want to take too long on thinking about the pair. But I was really kind of going against the trend, and I wasn't really following some of the things that you said. And I think things that we say, and I think me as teaching you guys, I really noticed that right out the gate, and I think that it's really, really easy, even for a person like me that's been trading for a very long time, to still make little simple mistakes. But it's up to you to really catch it. You call it out and you straighten it up. But when I straightened it up, it was like, oh man, I seen it right there. So that was the number one thing, fighting the trend. And the second thing I want you guys is never ever go against your gut. Your gut is like everything. I think for me, when I do my gut, my first choice is always the correct choice. And it's like I catch myself, like when I test certain things out, when I decide to make a trade, I'll do my first choice and then I'll blatantly go against my choice just to see what happened. And let's just say 8 or 9 times out of 10, my gut was correct. So that shows me that believe in what you've been taught, and you have to trust that what you've been taught is correct. But just saying all things are equal, that trust what you've been taught and that this really does work, and just really just follow the steps Respect your levels, respect these lines that you put in, these resistance and supports, because they're really, really important. And oh yeah, there's one last thing I want to say too before I pass over to Ty, is learn how to take your profit. Learn how to take your profit, because there's a lot of case scenarios where you see that you're up, you're winning money, and you're like, yo, I can definitely see this price going up a little bit higher. Let me just hold it and keep going. And it goes either all the way down to your entry or goes down to your stop, and then it goes all the way back up to your area, your take profit, and goes past it. So really, there's more cases than some where that if you don't take your profit, better chances are you're going to be stopped out. Your TP level has been hit already, but you didn't get out, and it came all the way down, and you've been stopped out, or you're going to be losing money. So when you see yourself up and you see your levels, and also if it didn't hit your take profit too, try to trust your take profit. But if you don't have a take profit, learn to take your profit. But Ty, drop some knowledge on the people before we exit out tonight.
Right. So one thing I want to talk about, something that I've been working on lately that can help everybody, I think, is learning how to trade with bigger position sizes. I think that's very important because when it comes to this market, you put a lot of work in, and I feel like eventually you get to a point where you know what you're doing. Now, it's up to us as traders whether or not we want to take a leap on that information to actually act on it and get what we deserve out of the market. Because let's say we have a certain skill set and we're trading a position size that's so small and minuscule that we put together this great trade that takes a lot of work to make happen, but then we don't get rewarded for it. We catch 100 pips and make $10. Wow. It took a lot of work to catch that 100. To catch $10 just makes you as a trader kind of like, and it makes you want to hold it longer and not take profit like Darren was talking about. So in order to start getting what you deserve out of the market, we got to trade size, people. We got to find ways to increase our position sizes responsibly, meaning that before you just go from trading 10-cent lot to trading a $3 lot, you got to at least practice it in simulation. Because we all know if you trade it live, it's going to feel different when you trade $100 compared to trading $1,000. Because it's a bigger amount, you might feel a little bit differently. So we got to practice that. We got to hop on the back testing simulator. We got to see, okay, how does it actually feel to trade with bigger size? Can you handle the swing both up and down? Can you control your emotions when you up and take profit, like Darren was just talking about? Can you control yourself when you're down and stop trading when you feel like you're just out of the zone or out of your mojo? It's all about discipline, and in order to gain that discipline, we have to practice. So before we start jumping into big positions, we got to practice first. It's like we do anything else. I think once we get that down pat, and once I get that down pat, it's better for us as traders because now we have more flexibility. In a situation where the move might not be strong, trade small size. In a situation where the trend is clearly obvious, we can trade bigger size and reward ourselves for being able to identify that. So I think that's what we all can work on when it comes to position size, because that, I believe, is the key to us getting what we deserve from the market.
All right. There you guys have it, man. That you have it. Another episode of the Bison Trading Show. I appreciate you guys for pushing up with us for tonight, rocking out with us. You know we're here every Tuesday and Thursday, but we made it tonight, Wednesday, because my boy Ty was going to be in the building, and I wanted to make sure my boy came on and dropped some knowledge. And we will definitely still be on tomorrow. I don't know if Ty won't be here, but I will definitely be here. Friday, what does it look like for you, Ty, for Friday?
I'm here.
You here? All right, so I think I'll be able to definitely pop in on Friday because I'm going to try to go into work a little bit later, but I'm going to definitely pull up with you guys, and trade some real money, man. So definitely hit that follow button, hit that subscribe button, man. Pull up to our YouTube channel, man. We got tons and tons and tons of it, not tons of videos, but we have over 20 videos, man, over an hour, all types of content, type of knowledge. You can definitely follow me on my personal IG at IMTHEDGUY. I was giving you guys the wrong Instagram the whole time, and I apologize. It is at IMTHEDGUY, at I'm the D guy. And my business IG at Pearl underscore financial underscore LLC. And you already know you can hit my boy at his links at.
You guys can make sure you follow me on both Instagram and YouTube under the name Ty Trades Futures. I trade the Dow Jones specifically over there. And I show you guys how to dive deep into the futures market if you're looking for different ways to diversify your portfolio and look for new investments.
So there you guys have it. Let me see, is there anything else? Tomorrow we're still gonna be here, same time, same place for me. 9:30. Link in the bio on my IG. You already know. Let me see. Is there anything else I need to say? Blah 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 blah. Oh, make sure you have your notebooks and your pens. Tomorrow's, man, we rocking out. Finally, my boy is here, and I can do what I've been loving to do when I exit out the show. And anyone that's new or old to the show should know my next line, man. Ty, please take us out of here respectfully.
All right, good people. It's been a nice show, man. We appreciate you for tuning in once again. Bison Trading Show live and direct coming to you. I know you guys learned something, so make sure you tap in tomorrow and on Friday so we can put all of these things together and continue building and growing as traders. And with that being said, man, we'll see y'all when we see you. Take it easy, man.
Peace. Grita. Bow, bow, bow.